Good afternoon, everyone. I'm Cindy Nellis. I'm with the Penn West Clarion Small Business Development Center, and we welcome you today to Withholding Basics. I know a number of you are just quickly jumping on, so I'm just going to go ahead and get started, introduce today's webinar, and then we'll be able to stay right on time. First of all, I just want to thank the Department of Revenue for partnering with the Pennsylvania Small Business Development Center in our yearly tax series or monthly tax series. We're excited to be able to continue to do this in 2024. We have 4 topics in our tax series, which we'll go over shortly. So today's the final one of the 4-part series. They include getting started with MyPath, Pennsylvania taxes for new businesses, sales tax basics, and withholding basics. So look for our series coming up in 2024. We plan to stick with the second Tuesday of every month. And you'll be getting more information on that as we move forward. A couple of housekeeping items. Today, if you have questions for our experts at the Department of Revenue, we ask that you put it in the Q&A. So look for that icon at the bottom. If you have a question for me, your host, please include that in the chat. So quickly, before I go through the Small Business Development Center, who we are, what we do, I just want to get started with today's webinar is about withholding basics. So whether you are hiring your first employee or you have employees or you're looking to pay someone to perform services for your business, we're glad that you're here. Today, we will help you navigate withholding basics from W-2 income to 1099s. You'll also learn when you need to withhold from compensation, which income statements apply to different types of employees or contractors, how to file and pay withholding, as well as year-end reporting. And additionally, we will touch on withholding for retirement income and Pennsylvania rules for different types of retirement withdrawals. So a little bit of everything today. Again, following today's webinar, you will be receiving all the presentation slides that you see and a recording of today's webinar. So first of all, just a quick introduction about the Pennsylvania Small Business Development Center. We are a network of 15 centers, all located throughout Pennsylvania. We are hosted by institutions of higher education. My host is Penn West Clarion. And every SBDC is responsible for targeted counties. So wherever you are located, there is an SBDC that can meet you in your neighborhood. We are funded through state and federal tax dollars, so we thank the Small Business Administration for their funding. We thank the Pennsylvania Partnership for Regional Economic Performance through the Department of Community and Economic Development on the state level. And of course, our host institutions does provide funding for us, and we thank them as well. So what do we do? The Small Business Development Center, it's our mission to help businesses start, grow, and prosper. We are here to provide education, information, and tools to help you, our business owners, make better business decisions. How we do that is we spend the majority of our time providing one-on-one business consulting services to those who request it. So I'll show you information, share with you information about how you can connect with your SBDC. Please know that our services are provided at no cost and they're confidential. We also do a lot of training like today, seminars and webinars. So we provide no cost or low cost training that's either live like today, or actually virtual like today, live in person as well as on demand. Every SBDC center in Pennsylvania provides training, and so I will provide you with a link that shows you a complete list of all the training that all the SBDCs are providing. And we certainly encourage you to check back to that website to see the topics as they change to, we are responding to training that you are looking for on a regular basis. And then finally, we are your access to valuable tools and resources These could be databases for industry and market research. It could be guides or forms or templates related to hiring employees. It could be employee handbooks. It could be business plans, lots of different things. So the Small Business Development Center, if you are a small business owner and you haven't connected with us for one-on-one business consulting services, I'd encourage you to do that. We are here to help you build and strengthen your business. So this is information, again, we'll provide the slides, how you connect with us to provide, to receive consulting services, how to check out our events coming up, and of course, my contact information, because of course, there's no wrong door to connect with the Small Business Development Center. All right, on to today's webinar. Again, Withholding Basics, our speaker will be Rachel Washington. Rachel is a research analyst, and she's with the Customer Outreach Relations and Engagement Division of the Division for Customer Experience Center with the Pennsylvania Department of Revenue. And we also have with us Alicia and Jason, who are also a part of the team at the Department of Revenue to help address those questions thrown into the Q&A. So with that, Rachel, I will stop sharing my screen and ask that you share yours. And we are excited to get started today.
All right, let me share this real quick. All right, so we can see everything okay?
Looks great.
Awesome. All right, so here we go. So, hi, and thanks for joining us today and learning more about personal income tax withholding basics. Once again, my name is Rachel Washington, and I am a research analyst for our Customer Outreach, Relations, and Engagement Division within the Customer Experience Center here at the Department of Revenue. So, a little bit of background about me. I started as a temp at the Department of Revenue in 2018, answering customer questions on the phones. And I recently graduated from Temple University in 2022 with a major in post-production and essentially a minor in accounting. I have been promoted to this position where I specialize in creating the Revenue 411 videos, which we'll get into later. And I help out a lot with other outreach and education materials you will see today. So let's get started. There we go. This is a brand new module that we added to our entrepreneurship or new business series to help business owners understand how to properly collect and remit withholding on behalf of their employees or contractors. Today, we are going to cover a wide range of information relating to withholding tax and the nuances that go into it. We will start with some fundamental information about personal income tax withholding and then move into different types of withholding accounts we have here in PA. So once you have an understanding of what you need to do as a business owner, we will then talk about how to register for a withholding account and talk through filing and paying requirements. And then after all that, we will be covering some things you should know about record keeping. Most new business owners don't realize just how important it is to keep good books and records, but please understand that this is for your benefit. If you ever get audited, which by the way is a standard business practice, you want to be able to show that you have done what is necessary to remain in compliance with the state. So then we will wrap up today's presentation by reviewing some resources that are out there to help you find answers should you have any additional questions after today. All right, so we're going to begin with some fundamentals. Before we get started, let's define a few key terms that you are going to hear throughout this presentation. The first term is employer. This is an individual or an organization in the government, private, nonprofit, or business sector that hires and pays people to perform work. Employers have the responsibility to withhold certain taxes from the paycheck of those individuals on behalf of the federal, state, and local government. These taxes are called trust fund taxes. The next term here is employee. An employee is someone that another person or company, otherwise known as an employer, hires to perform a duty. Employers compensate employees for their work to grow and maintain their business. Employees typically have a specified pay rate and a written or implied employment contract with the party they work for. However, some hired workers are not legally classified as employees and have a separate tax classification. Which then brings us to a non-employee. A non-employee is a self-employed person or entity contracted to perform work or provide services to another entity as a non-employee. As a result, non-employees usually pay their own Social Security and Medicare taxes. They also have to remit estimated income tax payments. So the next term here is withholding. Obviously, this entire presentation is about withholding, but it is important to note that we are talking about the money that an employer deducts from an employee's gross compensation and pays directly to the government. So then we have compensation. PA compensation includes salaries, wages, commissions, and every other item of receipt related to employment, whether it's received directly through an agent, in cash, in property, or otherwise, unless specifically excluded. So, employer withholding is due on all types of taxable compensation and is not required non-taxable compensation. So, non-taxable compensation, it is not required on that. A common item may be excluded from compensation for a small business is an employee's personal use of employer-provided property or employer-provided services. So additionally, any damages, whether by suit or otherwise, for personal injuries or sickness and payments made under Workers' Compensation Acts, Occupational Disease Acts, or similar legislation for injuries received while working are not included in compensation. Okay. Whoops. All right. So now we have benefits. Benefits are any form of perks or compensation that are provided to employees in addition to their base salaries and wages. While some are required by law, others are optional. Employee benefit programs such as pensions, profit sharing, and stock bonus plans, and simplified employee plans, SEPs, are established by employers to provide additional compensation to participating employees upon or after separation from service, the completion of a fixed period of participation, the lapse of a fixed number of years, or a showing of financial hardship. Employee welfare benefit programs are established by employers to provide benefits to employees or their beneficiaries, such as child care facilities, life, accident, or health insurance coverage, legal services, medical benefits, supplemental employment compensation, SUB, tuition reductions, disability benefits, strike benefits, and dismissal pay. Okay, so benefits included in employee compensation. Non-cash benefits, which are reportable as compensation under Internal Revenue Service rules, are generally taxable for Pennsylvania personal income tax purposes and are therefore subject to withholding. Taxable benefits include, but are not limited to, payments made by the employer to help employees with adoption expenses, payments made by the employer to help employees with additional medical or dental expenses not covered by medical insurance, unless allowable by an ordinary, reasonable, and necessary business expense. Medical expenses paid under a qualifying self-insured medical reimbursement account, such as medical savings account, are not taxable. Life insurance payments made by the employer on employees' dependents. Amounts paid by the employer for non-job related educational assistance provided to employees or their dependents. Amounts paid to employees in lieu of using vacation days, and payments by employers into pension plans, 401k plans, or other retirement plans made pursuant to the employee's election by salary reduction agreement or through periodic payroll deductions are taxable to employees and should be included in Pennsylvania gross wages on their W-2 forms. All right, so benefits not included in employee compensation. In general, Payments made by employers for employees' welfare benefit plans that provide medical, dental, or vision care for their employees are not considered taxable compensation for Pennsylvania purposes. Additionally, supplemental unemployment compensation benefits and most group term life insurance premium payments should not be included in compensation. Generally, an employer provides a service or property when the company assumes the financial responsibility for the liability or payment. In other words, the expense is billed to the company, and then the company is responsible for the payments. Therefore, the personal use of an employer's property, whether it's leased or owned, or a service provided by the employer, is not considered taxable compensation. Non-taxable items include the personal use of a company car, accounting services, or childcare provided, not reimbursed by the employer. So, for example, a company seeking to provide transportation as a non-taxable benefit for its employees could use a company van to transport them. The benefit actually becomes taxable when the company reimburses the employees for bus fare to commute or provides a transportation allowance. So federally excludable no additional cost services, qualified employee discounts, working condition fringe benefits, or 5 qualified transportation fringe benefits are not considered taxable so long as the employee does not have the choice between cash and the benefit, or the employee does not reduce their salary in order to receive the benefit. For example, a program under which an employee is furnished parking facilities, use of company grounds, picnic areas, or a workout facility at no reduction in the employee's salary and where the employee is not reimbursed for the benefit provides benefits not considered compensation and thus not subject to withholding. Okay, so withholding taxes vary by state and local tax jurisdictions. Most states operate like the federal government and have tax brackets, meaning that the percent of tax taken depends on their income level. However, PA is different. We have a flat tax rate of 3.07%, meaning that regardless of how much you make, everyone is taxed at the same rate. The amount of tax withheld is a credit against income taxes that the employee must pay during the year. For PA income tax withholding purposes, there are 3 different types of withholding we are going to talk about. The most common is employer withholding. Next is other income withholding, and last is retirement withholding. The type of withholding account that you need varies depending on whether you hire employees or non-employees to do the work. Additionally, some miscellaneous sources of income may subject you to withholding, and retirement distributions will as well. Okay, so employee versus non-employee. If you are a business owner hiring or contracting one or more individuals to provide services, then you must determine whether the individuals providing services are employees or non-employees before you'll be able to decide what type of withholding accounts that you need. So in determining whether the person providing service is an employee or a non-employee, all information that provides evidence of the degree of control and independence must be considered. So these are some common law rules. The facts that provide evidence of the degree of control and independence fall into these 3 categories. Behavioral. Does the company control or have the right to control what the worker does and how the worker does his or her job? Financial. Are the business aspects of the worker's job controlled by the payer? These include things like how worker is paid, whether expenses are reimbursed, who provides tools, supplies, etc. And then the type of relationship. Are there written contracts or employee type benefits? Example like pension plan, insurance, vacation pay, etc. Will the relationship continue? And is the work performed a key aspect of the business? Businesses must weigh all these factors when determining whether a worker is an employee or a non-employee. Some factors may indicate that the worker is an employee, while other factors indicate that the worker is an independent contractor or non-employee. There really is no magic or set number of factors that really makes the worker an employee or an independent contractor, and no one factor stands alone in making this determination. Also, factors are relevant in one situation may not actually be relevant in another. So the keys are to look at the entire relationship and consider the extent of the right to direct and control the worker. Finally, document each of the factors used in coming up with this determination. If it is still unclear whether a worker is an employee or an independent contractor after reviewing the 3 categories of evidence, then use Form SS8, Determination of Worker Status, for purposes of federal employment taxes and income withholding. This form can be filed with the IRS. The form may be filed by either the business or the worker. What will happen is the IRS will review the facts and circumstances and officially determine the worker's status. Okay? So be aware that it can take at least 6 months to get a determination. A business that continually hires the same types of workers to perform particular services may want to consider filing the Form SS8. Okay, so reporting compensation. Additionally, you need to know if you have employees or non-employees so that you can determine what form to use for reporting compensation at the end of the year. If you have employees, you will need to issue a Form W-2 and file in duplicate with the PA Department of Revenue. If you hire non-employees, you will need to issue Form 1099 NEC. And if you pay via miscellaneous sources of income, you will need to issue Form 1099 Miscellaneous. In addition, your employees may receive a 1099-R if they took a distribution from retirement, but that will likely be issued from the financial institution that is administering the retirement or pension plan. It is important to note that these forms need to be filed in duplicate with the IRS and the Department of Revenue, regardless of whether there's an actual withholding, so long as you have paid more than $600. Once you have determined that you have employees, you need to withhold income tax from their compensation, thus requiring an employer withholding account. Pennsylvania law requires employers to withhold Pennsylvania personal income tax from employees' compensation in 2 common cases. When resident employees perform services within or outside Pennsylvania, and when non-resident employees perform services within Pennsylvania. In simpler terms, if you have a business located in PA or conducting business in PA, you should withhold personal income tax on all compensation paid to PA residents, but you are only required to withhold on PA source income for non-residents. So, if the employee doing work does not live in PA, but the work is being performed in PA, there is a withholding requirement. Whereas, if the employee does not live in PA and the work is not being performed in PA, there is no withholding requirement. Remember, the personal income tax rate for PA is 3.07%, which means you must withhold 3.07% of the gross income compensation that you are paying the employee. We encourage you to deposit this into a separate bank account until you are ready to remit payment to the department. So the only exception is when an employee is a resident of Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia. Those states are considered reciprocal states, meaning employees only pay taxes in the states where they live. Even though it may be deemed PA-sourced income because the work is being performed in our state, we actually agreed not to tax them based on their residency in one of these reciprocal states. In these cases, the business is not required to withhold Pennsylvania income tax on the PA-sourced income if the employer withholds to one of the aforementioned states. Employees who live in these states must submit an REV 419 for you, their employer, to indicate they live in a reciprocal state. You must keep the completed form in their payroll records for 4 years in case of a withholding audit. If a business mistakenly withheld PA income tax for a resident of a reciprocal state, the employee will need to file a PA 40, Pennsylvania Personal Income Tax return, to then request a refund. If you have determined that you are hiring independent contractors or non-employees to perform services, you may be required to open an other income withholding account. You will see on the slide that you are required to open an other income withholding account when you hire non-employees that do not reside in PA to perform services worth over $5,000 for the year. Per IRS rules, the Form 1099 NEC, non-employee compensation, must be filed for each person that is not an employee of a business to whom the business paid at least $600 during the year. However, PA rules states that non-resident withholding doesn't kick in until $5,000 of income is paid to an individual or business. What is unique about other What is unique about other income withholding accounts is that it actually only applies to non-resident non-employees whom you pay over $5,000 annually. This means if you hire a resident contractor or non-employee who lives in PA, you do not have a withholding requirement. In these situations, you will need to file the 1099 NEC to report the income you paid, but you will not need to collect any withholding. Rather, the non-employee should be making estimated payments on their income. Another reason you may have to open an other income withholding account is to report miscellaneous sources of income. Again, withholding is only required if you pay via miscellaneous sources of income to non-residents in the amount of $5,000 or more for the year. As we mentioned previously, miscellaneous sources of income are reported on the 1099 miscellaneous. A business is required to file Form 1099 NEC and withholding PA personal income tax if all of the following conditions are met. Non-employee does not live in PA. Payment was made to an individual, estate, trust, or disregarded entity owned by an individual, estate, or trust. Payment for services was made in conduct of your trade or business. Payments equaled or more than $5,000 for the entire year. So then on the other hand, the withholding of PA personal income tax is optional if the payments did not total $5,000 for the year, the non-employee lives in PA, remember withholding is not required on residents, payment was made to a partnership, corporation, or multi-member LLC. Those entities have their own non-resident withholding requirements, but we aren't going to get into that right now. And if the payment was for services not related to your business. Please keep in mind that the payments we are referring to here is anything that falls under the compensation class of income or business class of income. We also mentioned miscellaneous income. Examples of miscellaneous income include royalties or broker payments, rents, prizes and awards, medical and healthcare payments, crop insurance proceeds, cash payments for fish or other aquatic life you purchase from anyone engaged in the trade or business of catching fish. Generally, the cash paid from a notional principal contract to an individual, partnership, or estate, payments to an attorney, or any fishing boat proceeds. For PA purposes, you are required to withhold PA personal income tax on certain payments of PA source compensation, business income, and lease or rent payments made to a non-resident individual or entity. This requirement applies to payments that meet or exceed $5,000 annually. Most often, small businesses would use the 1099 miscellaneous if they are paying rent to someone for their space. If the rent is more than $5,000 a year and the landlord does not reside in PA, the business should withhold personal income tax at the rate of 3.07% from the payments. Keep in mind that to qualify, you must be making rental payments to an individual, estate, or trust. If you're renting from something like a property management partnership, you don't have to withhold. As mentioned previously, partnerships, corporations, and multi-member LLCs have their own non-resident withholding requirements. Please be sure to follow IRS rules for issuing the 1099 miscellaneous. Okay, so finally, the last withholding account is retirement withholding. As a small business, you will likely not open a retirement withholding account, as you will probably not be the administrator of the actual retirement plan for your employees. However, for general information, the Form 1099-R must be filed for each person who made a designated distribution in excess of $10 or more from profit sharing or retirement plans, any individual retirement arrangements, IRAs, annuities, pensions, insurance contracts, survivor income benefit plans, permanent and total disability payments under life insurance contracts, and charitable gift annuities, etc. Hopefully, you now know what kind of withholding accounts that you need. So let's talk about how to register for those accounts. Registering for business tax accounts is going to vary slightly depending on whether you are an existing entity in PA or a brand new entity. Brand new entities who do not have any existing tax accounts with the PA Department of Revenue will complete the PA online business registration from the MyPath homepage. So, to get started, you will type in mypath.pa.gov and scroll down to the panel titled Registration. It's past the black login box at the top. From there, you will click the link that says Pennsylvania Online Business Tax Registration and run through a series of questions. The system is very intuitive, and depending upon how you answer the questions, this will determine what questions you are presented with. So, once that's complete and done, you will immediately receive a confirmation number, which you will want to save for your records. Additionally, you can use that confirmation number to create your MyPath profile. If you need help setting up your MyPath profile, please see our Revenue 411 video on creating a primary user profile. If you are an existing entity, say you have a sales tax account and you want to add employer withholding, you need to create your MyPath profile. Or if you already have one, log into your profile and then click on the More tab that's at the top of the screen. From there, you'll find a hyperlink that says Register New Business Tax Accounts. And this is very similar to the one on the homepage, but some more information will be pre-populated for you since you already have existing accounts within MyPath. Please keep in mind that most of the time, sole proprietors will have what we call existing accounts because their personal income tax accounts are linked to their Social Security number. So if you are attempting to register from the homepage and you're getting an error message, this is usually the problem. Registering online establishes business tax accounts with the Pennsylvania Department of Revenue, as well as opens unemployment compensation accounts administered by the Pennsylvania Department of Labor and Industry. Although all filing and payments for unemployment compensation withholding have to be done and must be done through Labor and Industry. So, once you're completely registered, you can get started with filing and paying your withholding taxes. Withholding returns are filed every quarter with the Pennsylvania Department of Revenue. Every business owner is required to deduct and withhold tax. They must file a quarterly return of income tax withheld on or before the last day of April, July, October, and January for the prior 3-month period. In addition, these returns must be submitted electronically. Currently, there are 2 methods in which you can do this: online or by using a third-party vendor. However, I just want to let you know, we strongly encourage you to use the MyPath portal to file and pay your withholding tax accounts. Here's some reasons why. Not only are you able to file and pay for the current year, but you are also able to view previously filed returns, access notices that have been issued from the department, request statements of accounts that are available immediately, as well as send messages to the department and a lot more. Another very important feature is that you can grant permission to others, like your bookkeeper, to also view the information regarding your returns on MyPath. You can access the MyPath portal at mypath.pa.gov, or simply visit revenue.pa.gov and click on the icon that says MyPath. That's right at the top from the homepage. And please note that you must create a user profile to utilize all of these services. Again, if you need any assistance for creating a MyPath user profile, please see our Revenue 411 video on creating a primary user profile. It's very good. It's very helpful. Additionally, if you need help, you can also watch our Revenue 411 video on filing a quarterly W-3. So lastly, the department does have approved third-party vendors who will provide e-filing software for customers who do not wish to use the MyPath portal. A list of approved software vendors is available on the department's website at www.revenue.pa.gov. Okay, so filing frequency. Whereas the filing frequency for withholding taxes is always quarterly, the payment frequency may vary depending on the amount of withholding that you are collecting each year. When you initially register for a withholding account, your payment frequency will automatically be set to quarterly. So near the end of every year, the Department of Revenue reviews the average of the current year, the first and second quarter of the current year withholding payments, as well as the prior year, third and fourth withholding quarter payments to determine if the filing frequency needs adjusted. So if your total withholding is under $300 per quarter, you would have a quarterly payment frequency. In this case, the taxes are due the last day of April, July, October, and January. If your total withholding is $300 to $999 per quarter, you will have a monthly payment frequency. For these employers, these taxes are due the 15th day of the following month. If your total withholding is $1,000 to $4,999.99 per quarter, you would have a semi-monthly payment frequency. For semi-monthly employers, the taxes are due within 3 banking days of the semi-monthly period, of the close of the semi-monthly period. So lastly, if your total withholding is $5,000 or greater per quarter, $20,000 per year, you would have a semi-weekly payment frequency, in which case the taxes are due on the Wednesday following the pay dates for employers whose paydays fall on a Wednesday. Thursday or Friday on the Friday following the pay dates for employers whose paydays fall on Saturday, Sunday, Monday, or Tuesday. Now, I know that's a lot of dates and a lot of amounts to remember. Thankfully, the department publishes a schedule every year, which is the REV 1716, which actually breaks down the filing and payment due dates by filing frequency. Very useful. Customers may request a payment frequency change if they so desire. A change to a more frequent payment schedule must be requested 15 days prior to the beginning of any quarter. You may request a frequency change through the MyPath portal by logging into your profile and selecting the frequency change hyperlink, or by using the send a message feature to submit a written request. An employer may change to a less frequent payment schedule only at the beginning of a calendar year, so long as the amount required to be deducted and withheld each quarter is reasonably expected to be less than the criteria amount for the current payment schedule. Okay, so similar to filing the returns, employers can remit their withholding payments one of 2 ways. Our recommended way is filing online via mypath.pa.gov or by using a third-party vendor. Important things to remember is 1, payment vouchers are only available via MyPath and the use of other tax forms could result in non-filer notification and or the misapplication of the tax payment. That's something that we see a lot. 2, per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfer, also known as EFT. So failure to comply with the electronic funds transfer remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, not to exceed $500. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So if every quarter you send in a check over $1,000, you're going to get hit with an EFT penalty every quarter. If you need assistance remitting your payment via our MyPath portal, please see the Revenue 411 video titled Making Period Deposit Payments. So in addition to remitting quarterly returns and payments, employers must also file an end-of-the-year reconciliation REV 1667. This annual reconciliation does not only reconcile all 4 quarterly returns that were remitted, but also reconciles any W-2s or 1099s reported by the employer. If you need help with this, please watch our Revenue 411 video, Filing a Revenue 1667. We cannot stress enough the importance of filing the annual reconciliation. Every year, there are many new small businesses that forget to file the REV 1667, which then flags the account for noncompliance. The same laws that impose taxes also impose record-keeping requirements. Records must be maintained for specific periods of time so the PA Department of Revenue may administer tax laws effectively. So the general rule is that you have to keep records as long as necessary. Many times, this means you must keep records supporting the information on a tax return until the period of limitations for that return expires. A period of limitations is the amount of time the department has to assess additional tax, and the amount of time you have to amend a return to claim a credit or refund. Period of limitations for withholding tax assessments is 3 years and begins when a return is filed. If returns are filed before the due date, they are considered filed on the actual due date. For refunds, the period of limitations is based upon the date the tax is paid. So, to comply with regulatory requirements, an employer must maintain records for each and every employee, and of how much, if any, of the tax that was deducted or collected during the payroll period. The amounts must provide a breakdown for each of the following. Amounts withheld greater than the required 3.07% pursuant to a written agreement under 61 PA Code Section 113.3b, amounts deducted pursuant to 61 PA Code Section 113.72 for an undercollection in another withholding period, amounts deducted in error. So remember that we followed many of the same reporting and documentation requirements as the IRS, so make sure you consult their requirements. So, in addition, your payroll records must show that you withheld Pennsylvania personal income tax on all taxable compensation at the proper rate and that you remitted the withholdings to Pennsylvania. To show these things, you must have documentation showing amounts and dates of all wage, annuity, and pension payments made to employees, amounts of tips reported to you by your employee, records of allocated tips, records of fringe benefits and expense reimbursements provided to your employees, dates and amounts of the tax you withheld from their pay, dates and amounts from your withholding tax deposits. We advise you do separate deposits for these transactions so they are easily reconciled with your books, and copies of withholding tax returns you filed and confirmation numbers. So a standard payroll journal and an accrual account can be used to record this information and will help serve as the basis for completing the W-2 wage record report. As we discussed earlier, employees who are residents of reciprocal states do not owe personal income tax to PA on their wages, as their W-2 income is taxable only to their resident state. So, if your employee lives in Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia, please have them complete an REV 419 and retain for your records. Again, as a reminder, if you, the employer, accept the REV 419, you must withhold the reciprocal state tax. Otherwise, you must continue to withhold PA tax. So, 1099 recipients are slightly different in that you don't have to worry about any benefits or business expenses. Anytime there is PA taxable income for non-employees, it should be reported on a 1099. You will be required to submit copies of the 1099 NEC or miscellaneous forms showing recipient number, last name, rents, royalties, other income, medical health care payments, gross proceeds paid to an attorney, non-employee compensation, box 1, state tax withheld, state income, schedule type, and any corrections, if any corrections were made. So we stated in the last section that you are required to file a quarterly employer withholding return and then an annual reconciliation for your employer withholding accounts. Your payroll expense records will become the basis of your quarterly employer withholding return, the W-3. Your records should demonstrate all taxes were withheld at the proper rate and that they were remitted on time. You should keep copies of your W-3 returns as they will help you in filing your REV 1667 annual reconciliation. It is important to know that periodically, the Department of Revenue conducts desk reviews or audits in which they review the records of thousands of businesses for tax compliance. This is just to ensure businesses have a correct understanding of their Pennsylvania tax exposure and that tax laws are administered in a fair and equitable manner. For the reviewer or auditor may conduct a complete review, or they may utilize test methods that allow for the examination of a representative portion or a sampling of the taxpayer's business activities. However, when records are incomplete or inaccurate, the department will develop tax estimates based on other information resources. This other information includes other tax returns and government or industry data applicable to the business. So the courts have upheld the department's right to use estimates in developing tax liabilities when reliable records are not provided as required. This is why it is extremely important to ensure you are keeping complete and accurate records at all times. Okay, so some resources. Withholding tax is a very important tax for business owners to deal with, as it is considered a trust fund tax, which means that the employees are trusting the business to withhold and remit their taxes on their behalf. And the Commonwealth is trusting you to make those remittances timely to the Department of Revenue. Let's discuss some resources that are available should you have any questions or concerns following today's presentation. Some of these have been mentioned previously, and this is simply serving as a reminder. So, the first one is the REV 415 Employer Withholding Information Guide. This guide contains all of the information that we reviewed here today and more. It covers withholding requirements, taxation on benefit programs, expenses, collecting and remitting your taxes, as well as overpayments and refunds, guidance for payroll providers, as well as phone numbers for areas to contact depending on your question or needs. This is available on the Department of Revenue website at www.revenue.pa.gov. So you can search under Forms and Information then forms for businesses, then employer withholding forms, or you can just simply type in REV 415 into the search bar that's in the top right of the homepage. So next is the REV 580, which is our FAQ sheet for withholding. This contains commonly asked questions regarding employer withholding tax and detailed answers. This also includes parameters for paper W-2 submission, phone numbers, and the website for the online customer service center, which I will go over shortly. So here we have the REV 588, Starting a Business in Pennsylvania, a guide to Pennsylvania taxes. This is a fantastic resource that touches on all the basics for new business owners. This guide includes information for sales tax, as well as registration, employer withholding tax, and other items that go into owning and operating a compliant PA business. All right. So I mentioned this before. This is the REV 67. This is the schedule put out each year that breaks down filing and payment due dates by filing frequency. So both the 2023 and the 2024 schedule are published and available on Revenue's website under Tax Forms and Information, Forms and Publications, Forms for Businesses, Employer Withholding Forms, or of course you can search the form number on our website. Like I said, it's at the top right of the page. It looks like a little magnifying glass. Click on that and you'll be able to search. So, in addition to payment due dates, this calendar also breaks down return filing due dates, so it is very helpful. All right, so now we're at the REV 1611. This form is used to calculate the interest on all taxes due after January 1st, 1982. It is calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year established by the U.S. Treasury Secretary is effective on January 1st of each year. For example, for 2023, the rate is 7% annually, or 0.00192% per day. 3 zeros before the rest of that percentage. One second, just making sure I'm at the right place. Okay. Now, FAQs or submit a question. We strongly encourage all of our customers to use the online customer service center. To do this, you can visit the URL listed on the screen, or you can click the customer service icon directly from our homepage. Here, you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure that the information you are receiving is accurate and relevant. If you are not able to find an answer to your question through the FAQs or general website resources, you also have the option to submit a question to the department. This feature allows users to submit either a general taxability question or a more pointed question regarding a specific scenario to a trained representative who specializes in withholding tax. We will review your submission and respond to it within 72 business hours in a process that is similar to receiving an email. So least we forget the Customer Experience Center call center. Here, you will be able to speak to a representative skilled in whichever particular tax type you pick from the menu prompt. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. Okay, so if you have a question specific to MyPath, for those of you using the portal for filing or remitting, please see our MyPath information page. We have created a vanity URL of revenue.pa.gov/mypathinformation to make this information easy to find. And last but not least, and certainly my favorite, we have created what we call Revenue 411 videos to help with filing and paying your taxes. We have mentioned a few of these videos throughout the presentation today, but we encourage you to go visit revenue.pa.gov/videos and see what we have out there. Alrighty. Thank you so much.
Thanks, Rachel. That was a lot of information. I want to encourage those attending today that if you have questions, we're happy to spend a couple of minutes here answering those questions. And I'm happy to unmute you if you feel that it's going to be too hard to type it in the Q&A and you just want to ask it verbally. If that is what you would like, all you have to do is let me know, throw it in the chat, and I will unmute you. In the meantime, I'm going to throw a poll out just for some immediate feedback for today's webinar. And then in addition, after we finish today, I will be sending out a survey through our SBDC portal asking you for asking you to give us some more feedback. So, maybe about 8 or 10 questions about today, as well as about the format of how you like training, the days that you like training, that sort of thing. So we continually tweak what we do to make it most effective for you. I do appreciate the links that were put into the chat by our experts here from the Department of Revenue. Thank you very much. I will also be sending out a number of links on the resources that were mentioned today. So I will send you the request for the survey. I will be sending you the slides that you've seen both from me and from Rachel. And then again, the links to the publications that were mentioned. And with that, I'm going to end the poll. Let's see here a second. And then if there's no specific questions, we can finish up today, but certainly I don't want to finish up before we finish. Before we give you all a chance to get your question answered. I do want to thank Rachel for all of this great content. Thank you to Alicia and Jason for sticking with us. And next month we will be back in January 10th with getting started with MyPath. And so we hope that you decide to join us next month. And again, I'll be sending out the information on the tax series once we have the flyer done in the next couple of days. So with that, gosh, I don't see any other questions. Rachel, thank you. Alicia, thank you. Thanks for a great year of webinars. We're looking forward to 2024. Thanks, Jason, for being with us, and to all of you attending today. Thank you for coming. We hope you all have a great holiday season, and we'll see you in 2024. Thanks, everyone. Have a great day.